Maybe thinking about revenue streams and coaching, financial coaching, because they're charging $95 a month for their program. You think it's something that credit unions can do? Because a lot of credit unions think, and even community banks, well, we're already doing that. I'm like, no, you're not. Not to the degree that Financial Gym is. And I think it's a matter of perception too, because a lot of credit unions, they think, oh, financial coaching is like financial advisory. And it's a very different type of subject matter. In fact, I think financial coaching is the first step to get people to that higher level of financial advisory, because it's about re-examining the relationships that we have with money that are rooted in our family of origin and our environment. And that shapes our financial narrative. And until we help people address and create that awareness of what that narrative is to begin with in the first place, and why we do what we do with money, and why we spend the way we spend, and why we save the way that we save, and not have any judgment tied to it. It's behavior based. Then and only then can we begin to transform that behavior. Frost Bank out of Texas has done some very interesting studies on this. A couple of years ago, they did the Opt for Optimism initiative. And in conjunction with the University of Texas, they found out that optimists are 7 times more financially fit than pessimists are. And so that begs the question, when we're talking about financial coaching, how much of this is historically we're trying to transform people's wallets, but in reality, what we need to transform first is their mindset. You transform the mind, then transform the wallet. And it's a different way of approaching the entire, the problems we're solving are the same. It's just the path to solve the problems is different. And a lot of that comes back to perception. So I think this idea of different tiers, that actually, I know you just finished reading Banking on Digital Growth. I approach that idea of tiers. You have a community-like approach. You have, kind of a once a quarter, and then you have a monthly approach to managing people's money, or managing people's relationship with money so that they can manage their money better. This idea of data, it's like we've in even Banking on Digital Growth, published in May of 2020. I think it was a year later, McKinsey came out with a report that talked about the financial advisor of 2030, and how the financial advisor of 2030 is going to basically be more like a quote unquote life coach. Hate the word personally, but it made a lot of sense, because if you have AI, machine learning, large data sets doing the heavy lifting, then the financial advisor, or I'll just use the word coach, has the ability to provide more accountability to those that they are working and coaching, working with and coaching. Because, and I hear some people are like, oh, well, we're going to build accountability into our app. I'm like, yeah, right. Like, how many times you don't even need an app to show that this is a failed concept, because back before phones and people would set their alarms, we were having technology try to hold us accountable to get us up. And what's the very first thing that we do? The alarm goes off, hit the snooze button, ignore. And it's like, if you're thinking that an app is going to transform human behavior, I'm sorry. I don't see it happening. If you think that AI is going to transform human behavior, I don't see it happening, because there's this, what is it? It's in film, but it's a concept called the uncanny valley. It's almost like, and who wrote about this recently? The Polar Express was a film that some thought was really creepy, the movie, because of the uncanny valley. It's like, you watched that and the characters looked like they were real, but based upon their facial expressions and some like little nuances that our subconscious minds pick up, we realize very quickly that they're not real, but it's enough to make us feel very uncomfortable in a situation like that. And so here we are now in this whole new age of AI. We know consciously that there will be an increase in fake news, in deep fakes, video, voice, etc. If an organization is, and I don't know why I'm thinking about this, but if an organization is thinking that, oh, well, we're going to solve problems with this AI chatbot, is there going to be a pendulum swing back the other way that I distrust that AI chatbot because consciously or subconsciously, it's the uncanny valley. I know that I'm not chatting with a human being, and I don't know if I can trust this thing. So there's a lot of, like, I think, little nuances here that when you're getting into things like financial coaching and you think you're going to solve the problem with an app, I think you're mistaken on that. When you have a person who's able to look at the data, transactional data, spending data, and just ask questions. So I saw you did this last month. I'm not judging you. What was going on? Why were you doing this? I mean, even Audrey, you've spent 6 months in the financial gym. I mean, what was the biggest transformation? And more so, I'd probably say awareness to that, Audrey.
I think a lot of it was the emotional side of spending and really looking at where I had upticks and why maybe, and really tying it to a lot of things that were going on in my life. And it was unnecessary spending, and it was spending because I wasn't feeling good about something. And so maybe I was overcompensating. And so, yeah, I mean, it was a lot of just really personal, like, money psychology and figuring out why I spent money when I did and how I did.